Do you remember 1974, Watergate, the Nixon administration, and the talk of impeaching Richard Nixon? Do you remember the mid-1990s, the Clinton administration, Monica Lewinsky, and the ultimate impeachment of Bill Clinton? What about today, Donald Trump, and the talk of impeaching Donald Trump? Well, if Donald Trump is impeached, what will that do to the markets? Let's take a look. This is the S&P 500 index from 2008, and it shows the path that we've gone to get to these current levels at record or near record territory. And it's called the Wall of Worry. And since March 2009, which many view as the bottom of the market at that time, the S&P 500 has rallied about 320%. The Dow Jones Industrial Average has soared nearly 300%, and the Nasdaq has also climbed by about 520%. But you can see that along that road, there have been many bumps. This is called the Wall of Worry. And in that regard, we have one more worry to consider, and that is impeachment. Do you remember the tumultuous end of the Nixon administration in August 1974 and the national mood at the time? From a capital markets perspective, it was also a grim period. The S&P 500 fell 26% in 1974, tagging on to a 14% drop from the prior year. And that memory cast a long enough shadow that the S&P futures recently dropped after the Cohen-Manafort convictions on fears that the U.S. is doing a slow motion tumble into political chaos. That U.S. stocks recovered significantly is a good reminder that 2018 is not 1974. Back then, the country entered a deep recession in 1973 on the back of a much higher oil price caused by shooting war in the Middle East and the Saudi embargo, and a weaker dollar. Today, we have 20% earnings growth, a good economy, low stable interest rates, and a rising dollar. From a macroeconomic standpoint, things are very different indeed. Still, there is little doubt that a political event on the scale of a presidential impeachment would roil markets. Consumer confidence would likely take a hit. Business investment might slow as managers take a wait-and-see approach to political developments. Whether this would cause a 5% pullback in U.S. stocks or more is unknown. So how likely is an impeachment? Well, from online prediction market predictit.org, which allows users to place small wagers on political events, there are a few relevant data points. 90%, that's the current odds that Trump will be president at the end of 2018. 67%, that is the odds that Trump will be president at the end of 2019. And 45%, that's the odds that Trump will be impeached in his first term. Now, on a related point, taking a look at a Quinnipiac poll released on July 25th that asked respondents, if the Democratic Party wins control of the House of Representatives in 2018, would you like to see them begin process of impeaching President Trump or not? And here's the answers. 55% said no. Now, 65% of self-reported Democrats do want their party to start impeachment proceedings. And among independent voters, 53% said no, and 42% said yes. But remember that if the Democrats take the House, the Republicans will probably still control the Senate, so an impeachment might go through the House, but is unlikely to move through the Senate. Now, here's the takeaways from this. Over the short term, markets will likely ignore political headlines. This isn't 1974. There is plenty of positive corporate and economic news to buffer equity prices from any small shock. It will take a decisive outcome to the Mueller investigation to swing general U.S. public opinion towards impeachment. As controversial as President Trump may be in some circles, and even after all of the headlines, more than half of Americans do not want their representatives to impeach him. In the end, I would not worry much about this issue from an investment perspective, regardless of what happens in Washington, D.C. Aside from some nasty sounding headlines, all this will run its course. Anticipated economic earnings and interest rates drive stock prices, and nothing else. So for today, that's ChewDog Charts. Thank you.